But first of all, thank you so much for everybody to come here to join our webinar. Can you guys all see the screen right now?
Yes.
Okay.
Yeah.
Yes.
Because this is our first one, very first town hall Q&A, I just want to do a little intro because we have never done it, first of all. So I want to ask for your patience in case there's some technical difficulty. But ideally is that we can continue to do this in the future to answer questions. Obviously, we are all, most of us are really just staying home right now, working from home because of this shelter in place order. And there are so many questions out there. We are just constantly on webinar, on conference calls with different professionals. And I sometimes wonder, like, do any of my clients actually know what's going on? And then on the other hand, I'm watching the news, and news gives you a completely different view of what's going on in our local market. And I think it is really important for us to let our consumers to know what's going on in our local market, not just from the national news, because Bay Area is so different compared to anywhere else in the country. In case some of you don't know who we are, I just want to do a very quick intro. Again, it's just because this is the first time. We are actually a team of real estate agents. Our company name is called Halen, and we're in San Jose, California. Our team of agents specialize in first-time home buyers, rehab. I call it transformation projects because we just love to, help our sellers to transform the property before they sell it. And then we have agents who specialize in condos, townhouses, apartment investing, and financial analysis. And a little unique experiences about our team is that we actually are involved in several leadership roles in the local real estate community. And also we write contents for Forbes.com as well as ForbesSpeakers.com. Now, I kind of touched on a little bit about why I'm having this town hall Q&A because I just want to solve that issue regarding the information gap we have between the consumers and also the local real estate industry. And that's why I figure, let's provide education directly to consumers. I'm constantly on webinars with other real estate professionals, but what about consumers? They don't know anything about it. And I want the information to be shared. Even I might be learning something from the lenders, from the title, from 1031 exchange, from property manager. And let's share as much as we can about what we know. And then also, most importantly, is that right now, I think a lot of people are scared, are worried, and let's use this channel to empower each other, to let each other know what's going on. I think knowledge is power. So, so this is the reason why we're creating this. And lastly, before we go into asking your questions, I want to let you guys know about the format of this town hall Q&A. The reason why I call it town hall Q&A is because literally, there's no presentation here. It's all about you guys asking questions. Someone else is going to answer. It doesn't have to be me. We have a lot of professionals here that can answer your questions. If we cannot figure out the answer, we'll help you find out. So if you look at your screen right now, something really easy to, some instructions for you, basically learning how to unmute or mute yourself if you have background noises, how to start or stop your video, so either we can see you or we cannot see you. Type in your questions under the Q&A box. So if you have questions, you can type in there. Someone can answer you, either answering there or we can answer here. And then if you need to chat with somebody privately or to the group, you can go onto the chat box. That's where you can chat with somebody. And if you have a question, and somehow we don't hear you, you can actually click on raise hand there so that we know somebody actually raised their hand and want to ask a question. So anybody has any question about this?
No, I think we're good.
Okay. We don't need to do a practice, right? Practice run to raise hand? No? Okay, let's get started. Now, let me ask if anyone has any question first about the current housing market. Oh, I'm sorry. You know what? I want to start with this. This is going to help us also. I want to, if you guys can you guys see the poll right now?
The what?
a poll. I just launched a poll in front of your screen.
No,
Nobody can see it?
I don't see it.
I don't see it.
Uh-oh. Huh. Okay. See? First technical difficulty. Well, my first question on my poll, it says attendees are now viewing questions, but apparently nobody can see it. But I kind of wanted to know if anyone here is interested in buying, selling, investing, or currently in escrow, maybe your real estate agents, lenders, title, or property managers. I know it's going to be very difficult for everybody to answer this question, but maybe when you ask your question, you can let us know. That would be great. And maybe if you guys want to touch on if this coronavirus affected your decision in the real estate market in terms of buying or selling, and also what would you like to learn most from today's town hall? That would be very helpful. Now, other than that, I see somebody said that I don't think the unmute option is available for everyone. Okay, so if you want to talk, why don't you just go ahead, raise your hand, and then I can unmute you, okay? All right, so let's go ahead and start your question. Anyone has a question?
So Helen, just I've been following up on the group that you created. One thing is for people who own multifamily, and then I saw in the articles that they're saying there will be a some kind of relief, like a mortgage relief for the building owner or the property owner. When is that coming through?
From what I understand is that it's still work in progress. They have not passed anything yet. It's still talking. I think, again, the government is still trying to figure this out right now. Literally yesterday, they just passed a spending bill. And then I think it's just going to come down the pipeline. Mark Guzman, you are a property manager. You deal with a lot of multifamily landlords and tenants. What do you think?
Yeah, in terms of mortgage relief, what we are recommending to our clients right now is to contact their mortgage lender. I've had a few clients that have been successful in getting their April mortgage payment deferred. They are doing this quite a bit with 1 to 4 unit properties. The 5 and higher unit properties are a bit more difficult and take a little bit more negotiating. And I think they're going to wait until April to kind of see what kind of rent collections are really coming in. But 1 to 4 unit properties, my clients are successful in getting their mortgages deferred. If you have a Fannie Freddie insured mortgage, they are doing deferments for up to 1 year for mortgage holders. And I believe HUD just announced last week that they're doing a stop on evictions and foreclosures for public housing. So those are the current announcements right now.
Yeah, I saw that too, actually. Yeah, like you said, Fannie Mae and Freddie Mac, they are actually deferring some of the mortgage payments for landlords as well. And especially if tenants start using that eviction moratorium, then that will hurt the landlord to pay for the mortgage bills. In terms of 5+ units, because a lot of these loans are not Fannie or Freddie Mac insured, so those you definitely have to talk to the lender directly.
How do you know if a loan is a Fannie or Freddie insured?
Well, actually, how about Marty? Can you answer to that question since he's a commercial lender?
Can you hear me?
Yep, we can.
Typically, if it's Fannie or Freddie, probably, again, best thing is to go to the original broker that took you into the deal. They'll let you know if it's a Fannie or Freddie deal. Most of the deals that you're going directly through, either directly to banks or through a mortgage broker to a bank, those are not going to be Fannie Freddie deals. I don't know if that helps, Helen, but it's probably simplest to take that approach for folks that don't understand Fannie Freddie.
Yeah, I have one of my commercial loan that on the apartment building that I own is I know for a fact that it's Freddie Mac loan because we had to go through that Freddie Mac qualification and approval. But there are a lot of loans, commercial loans are actually, by portfolio lenders, and it's different every single lender. So I think it's important, just like what Mark had said, just call your lender and ask them. Okay, so Susanna has a question. With mortgage rates all-time low combined with COVID-19 limitations on showings and appraisal, do you see this as a benefit to buyers or not a good time to buy at all? Anyone want to talk about that?
This is Daniel Gatt. If I could jump in on that, and then I would love for the gentleman from Wells Fargo to also jump in on this, because I think we may both have similar feedback here. But the media is portraying that the rates are at all-time lows, and I think what we're finding actually working in the business, and maybe the more articles I read, I'm learning more and more that it's pick and choose a bank, because the banks typically all have rates that are kind of in the same ballpark, and right now there's a big spread between the banks. Now the rates are still historically low. I mean, I'm seeing for conforming loans, 3.5% with no points, and high balance loans 3.625% with no points. Not sure on jumbo. I'm going to leave that to Wells Fargo. As a broker, my jumbo rates will not be anything near what I think the jumbo, like what Wells Fargo could offer. They could probably offer much better rates to their clients, but the rates are still very low. And I'll be honest, from my perspective, I have 2 clients that wrote offers this week. So I was thinking that people were going to hold off on buying because of the shelter in place, but I think the historic low rates are still pushing the market. And there's even articles I read that anticipate that, that we may not, even if there is a recession that's the cause of the COVID-19 health pandemic, that there's a high likelihood, according to this one article at least, that the housing market may not even be affected by it because it's not the same type of recession that was caused in 2008, which had to do with bad lending and bad loans or unfavorable loans. So from my perspective, I think anybody who's in the mortgage business right now is overwhelmed with business from refinances, and are still people out there that are looking to take advantage of making a purchase. And, with home buying, it's not short term, right? People want to buy a house. They're looking at something minimum 7 to 10 years in general. So even if there was a slight dip in the markets, when you're talking about holding something for 7 to 10 years, especially in the Bay Area or in Los Angeles and any of the major cities in California, you can expect that the housing prices will still go up even if there's a slight dip. So I find that most of my clients don't seem to be too concerned. At least that's the perspective I'm getting from my clients.
Yeah. How about Victor? Victor from Wells Fargo.
Hi, can you hear me, Helen?
Yep, I can hear you now.
Yeah. I mean, I think right now the bank is really careful about putting the rate out there because we want to control our capacity. On the refi portion of it, I think we increased the rate quite a bit actually since the last couple of weeks, just to control capacity, because there is a huge commitment to the client. We want to ensure that we can able to close the loan with the appraisal is getting slow. All our underwriting and processing, they are all working from home. So the speed are not going to be like what we used to be. Now, we definitely are still focusing on our purchase market. Our jumbo rate right now on a purchase is looking around like 3.25 to 3.375 with an APR of like 3.375. The 7/1 ARM, we still at a 2.625 to 2.75 with an APR around like 3%. So we're still very competitive on it, and we're still doing the business because our underwriting team, even though they are working from home, we still take the same around time for the underwriter to review. So with that said, I do agree that right now it is slowing down a little bit because it's really hard for people to go to see houses now. It have to be by appointments. People are scared to go out. So I think that it is slower, but the market I think is still pretty strong. That because the economy is actually really really strong before all this happened. So as long as people are still employed, I do felt that the real estate market is still going to continue to be really well. And I mean right now actually it's a good time if we have inventory that you don't have to compete, because in early February, I'm sure Helen can also speak to that, is we a lot of the buyers are getting compete 15 to 20 offers on a good location house, and then the price was like maybe like 100 to 150,000 over the listing price. So I mean, with that said, I think that once this virus has been cooled down or have been resolved or get cured, and I think that the market will still stay really strong on it.
Yeah, I think you both touch on a really good point. Is that surprisingly, we do still see a lot of activities. A lot of buyers like, I don't care, I still want to look for homes, and then sellers like, I don't care, I still want people to come in to do staging, take pictures. Literally, we just got off another call with a bunch of agents, and that's what they were talking about. And we have agents who did, I think Susanna, you heard that, it's like they did a virtual showing and then they got multiple offers on their property. It was just shocking how much demand is there. And on another point about like how this recession, because I know Chendi, you're asking, consider the pandemic now, is it a good time to buy investment properties or should we wait? Now the question is like where you're gonna buy. My personal opinion is that, and from what we observe, is that we still see demand is still there for sure. We do have, I would say we have, I don't know, tens of clients, and then we have 3 that said, our down payment now is in the stock market. It dropped so much, that's why we cannot afford to buy. But it's not because of their income level, it's more because of their down payment in the stock market that caused that. So if our clients, their down payment is already in cash, they are still buying, they're still continue moving forward, looking at homes. It's just that right now with the shelter-in-place order, especially Santa Clara County, we have really strict restrictions in terms of private showings. So that's why it feels like everything just stopped. But on our back end, we have so many of these coming soon off-market listings that people are marketing among the real estate industry or real estate agents. We see the activities, but then I think most of the consumers just don't see it on the front end. So it's the long, I want to bring up a point, and maybe Kelly, you can talk about it too, because just now, Victor, you mentioned appraisal, underwriting, everything is slower. And then I don't know if anyone on this call have any transactions under escrow right now. We have few that same thing is under escrow. We are having delay. At first, I think last Monday, we all had a scare saying that there's no recording going to be done because recorder offices were going to be closed. But now they figured out we can do e-recording. And then I just got a call from an appraiser making an appointment with me to go into a house. And I was like, you're still coming? I thought we have a shelter-in-place order right now. And she's like, no, yeah, I'll come tomorrow. So now it's scheduled for tomorrow to come for appraisers. But I do definitely see a lot of delay. I'm wondering, Kelly, you are in title and escrow. Do you see a lot of delays in closing right now? And let me unmute you, Kelly. Hold on just a second. Okay, there you go.
Okay. So hi, I'm Kelly Kalashaw Escobar, and I'm with Stewart Tuttle's National Commercial Department. We're seeing delays, but really just maybe a day or two, and that has to do with the recording hours that they have. So specifically, Alameda County is doing something called a drop box. They're not doing e-recordings. Many of the recorders' offices have what we call shortened hours, so we may not be getting confirmations as quickly, but most of our transactions are not delayed. Now, one thing about Stewart Title is that we are the 4th largest title company, but we're not the largest. So we're very flexible, and we actually do most of our work ourselves. So we don't sub things out overseas. We run the whole operation with boots on the ground here locally. And because of that, we're able to still research and get items, but I have heard there have been delays with some other title companies that are doing the best they can through this, but use different types of services. We also do something called closing on a gap, and we do blind closings, which we've been doing for many years. So what we do here is what's called a blind closing. It takes 2 or 3 weeks for the general public to see the recording confirmation, but we have it in hand, and then it becomes public. That's considered a blind closing, and we issue policies immediately when we close a transaction. And most lenders, that's what they want in this area. But for example, in Kentucky, we do something called closing on the gap. That's what's standard there. And closing on the gap means that we call the transaction closed when everyone agrees, and then we record later, which is usually the same day. Then we disperse, but it can be several days later. The policy will reflect the date that we actually record the documents, but the transaction will be closed and we will disperse funds based on the agreement date. That language is standard in our Stewart title policies already, and we are able to do that here if in fact we have an issue. We have people sign gap paperwork on the regular, and we would be able to close transactions using the closing on the gap feature if the lender would allow that, if there are more closures, and we do see that, and we would wait several days for the policies but issue the payments right away.
Yeah, that's great point, is that if the lenders will allow it. So now Daniel and Marty, you both raise your hands. Daniel, go ahead.
I was just going to make mention that Fannie Mae and Freddie Mac, at least for conforming loans, so this is not, I don't know what's happening on the jumbo side so much, but on Fannie and Freddie loans, they're now allowing, in many cases, for drive-by appraisals where they don't even need to go into the house at all to deal with. This is through April 17th, at least, and they may extend it further, but at least until April 17th, they're making provisions to try to, keep people as safe as possible, limit contact as much as possible. Now, it's not it's to some degree, it's up to the lender's discretion, but it is allowable. So given that these are Fannie Freddie loans, any lender that we're talking about that sells the loans ultimately to Fannie and Freddie, they shouldn't have any concerns about doing these type of appraisals. Because most lenders are worried about the sellability of their loan at the end of the day. So I think that's another point I wanted to make was when you're talking about the appraiser coming out, that's what I wanted to touch on, was that it may not even be the case for many new transactions now that the appraiser even has to see the property. They may just do a drive-by. And it, again, depends on the size of the loan. If it's Fannie Freddie, if it's jumbo, those are going to be the X factors. And with regards to, I'm sorry, I got distracted for just a second with regards to the follow-up question about what lenders are allowing as far as, I apologize, what we were just talking about. I lost my track.
What lenders are allowing the gap insurance?
Yeah, so far actually, we just actually closed a transaction. I want to say it was even earlier this week, and I apologize. Yeah, my pipeline of business is primarily refinances right now. So there's so much stuff I'm working on. And kind of just it's breezing through me. But I know that we did get gap insurance on one of the transactions that we just closed recently. So I know that was allowable on something that we closed on. I think it was the end of last week even. So I do think that it's probably lender to lender. So I would love to hear the opinion of other lenders on this call, but I know that we were able to work with that on a deal we closed, I think on Friday.
Okay. How about Marty?
The only thing I wanted to bring up, Helen, is I know that the questions were, is it a good time to buy investment properties? And then we went into residential lenders, and for the folks that are on the call, they may not know whether they're talking residential lending or commercial lending at that point.
Good point.
I want to make sure we limit the confusion.
Yeah, so I think most people may not know there's a difference actually. So the reason why we have Marty in here, he's a commercial lender for, let's say, for residential finance, residential investment. You can invest in 1 to 4 units, which would be more Daniel and also Victor's residential lending side. But if you're investing something 5 units or more, that's considered commercial lending, and that's more Marty is specializing in that.
What I would also say to them, Helen, is that would be for apartments, et cetera. But if they're going to get into office buildings or anything non-residential, that's going to fall more commercial, with the exception of maybe private money deals and things like that.
Right.
The other thing I just wanted to bring up, and you and I were on that call yesterday with CCIM. What I am seeing is there are several private money lenders in the commercial realm that are sitting on the sidelines right now. They haven't figured it out because they're really not going to have the government as a backstop. So they're still waiting to see what it means. And while others are saying they're active. And I haven't seen any deals personally fall through at the last minute. but it is a concern because each of the financial institutions are trying to figure out, do they want to stay in the game? Do they have protection to the downside? And, I think this all goes back to the question from, I think it was Chendi, that was saying, hey, is it a good time to buy investment properties? And I think that would apply to whether it's residential or commercial. And, Helen, you can answer that from your perspective. From my perspective, I think it's going to be, you got to be very careful on the types of properties you go after. I think if I were, advising clients, I would say it may be a great time to buy investment properties, and I'll go with the commercial side for a moment. But I would be very careful in the tenant mix, and probably very safe in multifamily, even because they'll get help from the government, I'm assuming, at some point. You're probably safe in any kind of medical, dental buildings, because those are businesses that are going to flourish. I would say avoid the ones that are in trouble, the hospitality related type tenant, anything that would be at the moment, restaurants, et cetera, those kind of things. Those are going to be a little bit more risky.
Right. So I want to move forward real quick. I know, Daniel, I saw your hand raised, but I want to answer Susanna's question really quickly. Is the loan approval being more easy during COVID-19 shelter-in-place markets?
I can address that as well. The process is essentially the same for the loan approval, right? It's, if it's a Fannie Freddie loan, it's basically the same guidelines. I would assume that for jumbo lenders, which I do jumbo loans too, but right now, I'd actually recommend definitely talking to our friend at Wells here, because you're going to get a much better deal on a jumbo loan that directly from Wells. So the guidelines haven't changed. Debt to income ratios, reserve requirements, all of that stuff is remaining the same, at least from Fannie Freddie perspective. I can tell you that there's absolutely no difference. So there's, I'm not seeing it be any more difficult or any easier. It's all really the same, aside from the appraisals maybe being a little bit easier if we just have a drive-by appraisal. But I want to piggyback also on what was just said a moment ago about the hard money lenders, because that's actually in the residential lending world. There are QM loans and non-QM loans. So QM loans means it's a qualified mortgage. Basically, it's what all the big banks do. What 99% of the banks in the United States do is QM loans. Then there's 1% of loans out there that are called non-QM loans, which are specialized loans for people who don't qualify fitting within the box. And also hard money loans could be falling under that non-QM group of type of loans. But there has been a big exodus in that field in the last week, and for the same reasons that Mark mentioned, was that there's not the financial backing for those type of loans. The people that back the non-QM loans, they don't have government assistance if those loans start defaulting. So a lot of the people have backed out of doing non-traditional loans because they were pretty much funded from hedge funds, and people like the stock market, which is now rebounding, thank God. But like the stock market, a lot of people were selling out and didn't want to have money tied up in these non-QM loans. So I still have access to some of these type of programs. So for instance, if you are a client or you have a client, depending on who's listening, and if you're an agent or an actual buyer, if you're somebody who doesn't qualify for a traditional loan, there's the options out there. If you're self-employed, to qualify using bank statements instead of tax returns, these type of programs, there's still a few of them available. But where, as of a week ago, there was an enormous marketplace for this. And as of current, there's a very small marketplace, just because this type of lending is it's not secured by any type of government help, and it's only going to be private money. So private money people are being more tight with their money. But I think as we get through the pandemic and things get back to normal, I expect that this type of lending will come back. People will be more comfortable. They're just playing it safe at the moment.
Okay, great. Also, Chendi has asked this question: do you expect to see price drop for the housing market in the near future within months? If so, will there be more inventories available if the price drop in the next few months? Anyone want to answer this question?
Hey, Helen, it's Andy. I'll jump in on this one. So, what we have to consistently remember is that a recession does not mean housing market fails. And in fact, over the last 5 recessions that we've recorded, only in 2 of those did we see any price drops happening in the housing market. And one of those, of course, being the 2008, where we had the highest hit. The 3 that actually fared well for housing prices rose anywhere from 3.5 to 6.1% after it went in that recessionary period. So what we're really advising sellers right now is that we can actually have lower inventory, because there will be some sellers that get out of the market because either they have health issues or concerns, or just really aren't ready to have people in their house just yet. So when that happens, we actually see inventory getting lower, and really it's going to be, you know, what we anticipate for the buyer demand. But at this point, we should be advising our clients that price drops aren't necessary in the middle of this downtime, and that we should maintain and take a look and see what buyer demand looks like once we're able to write more offers.
Great. I mean, this is a topic that I didn't want to answer, because I'm going to go off on this, because I have so much to say about this. First of all, I mentioned earlier that demand is still there, and it's really hard for people to grasp this concept. It's like, you sure? Are you lying to me? That's why I wanted someone else to talk about it. But for us, be on the ground, we actually saw so much transactions going on. Last year, 2018, 2019, we definitely had a slowdown. It wasn't a good year for the sellers. And at the time, I saw we held open houses. We had a lot of people coming in, but every single buyer we talked to, I would say 80% of the buyers we talked to, they said, oh, all the economists that are talking about 2020 is going to be a recession year, so we're just going to wait until 2020 when the price dropped. And what happened 2020, January? The demand, the people who came out to open houses went through the roof. It was just, I think, minimum like 50 parties a day or something. And then all these offers that we wrote, we're competing with 10 offers, 15 offers. We had property that's like 1,400 square feet in Los Gatos asking 1.8, and it went to $2.2 million. They're like, what just happened here? So I think at the end of the day, when people ask me, is this the right time to buy? I always say it is always the right time to buy in any market, but how do you buy? Is it a speculation market? Is this for your home, or is it for investment property? You have to think about, if this is for investment property, there's always an opportunity in everything, but you just have to make sure that you're not going to go into negative cash flow when you're buying this property. That's also one of the reasons why we do all kind of analysis for our clients before they make a decision if this is the right property to buy or not. In terms of, I think that there will be more inventories available if the price drop in the next few months. I think the inventories is going to come back for sure, but then still relatively low. That is also one of the reasons why we still have such strong demand. We just don't have enough inventories on the market. And if the price, I think the price will adjust no matter what. This had scared a lot of people. So buyers definitely immediately feel like they have more negotiation power. But if you compare to other markets, Bay Area, we're using Zoom. We're using all this technology right now, which is kind of, and unfortunately, we're fueling our technology industry here in the Bay Area. So I don't see a big drop here. Even if there is a drop, it's not going to be anything close to what other market is going to experience. That's my take on that. Okay.
Yeah, I'll just add into that too. The way that consumers respond in a crisis situation is definitely different than what we've seen in traditional stock market recessions. And so in fact, consumers like to put money back into the economy. We saw this after 9/11. The Dow had completely rebounded within 60 days after 9/11. So, you know, I'm actually kind of hopeful that as buyers get back out there, then sellers will actually, like you said, have a little bit more negotiating power because inventory will be lower. But more importantly, you know, once we can get offers written, we're going to see, multiple offer situation as people pump money back into the economy, especially people here in the Bay Area.
Mm-hmm. All right. And Jenny, with refi mortgage rate being market low, faced with the pandemic, potential bear market looking forward? Do lenders anticipate tightening on lending to avoid 2008 loan defaults? Lenders? All right. Anyone?
Hey, Helen, I can pick up this one.
Oh, go ahead.
Yeah, so I mean, I think the guidelines that we currently have right now in place are pretty solid, especially for banks, because we do full docs review on documentation. So banks doesn't, I mean, speaking of Wells Fargo, we don't do like stated income. You know, we do our full credit check. You know, we look at bank statements, employments, W-2, pay stub. So I mean, it's full docs. So I mean, we didn't loosen up the guidelines. Actually, it's pretty similar to what it is for the last 6-7 years. So I mean, I think moving forward, we will keep it that way, unless otherwise. But I think the guidelines should be pretty similar, and I think that the banks are comfortable with that, and then they will continue to do it that way.
I agree 100%. I think that the banks already tightened the guidelines tremendously after 2007, and the way that they tightened them is enough that it's safe lending using the guidelines that they have now. So I don't see any reason that there'll be further restrictions put in place. You know, the jumbo lenders are typically staying at a 43% debt versus income ratio to qualify. Fannie and Freddie, you might be able to go up to 50% debt to income ratio. But, you know, traditional lending doesn't allow for stated income for traditional financing, which is makes up more than 99% of the financing in the United States, is all using tax returns, income documentation, credit, you know, all the parts to make sure that the loans that we're giving these days, unlike prior to 2007, are all going to be loans that can be paid. You know, presuming people are back to being employed. That's the only concern. I think that the servicing side of the business, the people that service loans, they have a little bit of concern, obviously, if people default on payments. But you know, that just depends on how quickly we all stay in our places and get through this pandemic, and then we can get back to normal. And then when we get back to normal, I think that, you know, I don't see any reason why people would not go back to work and everything gets back to normal. So I really don't see any changes coming in the mortgage world as far as guidelines tightening or anything else like that, because I think they're tight enough right now to have a safe economy in the mortgage side of things.
Yeah. Okay, and I just want to read out Mark Guzman's, who is the property manager, his comment. I don't see a major drop in prices within the first few months. Demand is dropping slightly, and everyone is waiting on the stimulus package announcement. Unemployment claims will be released tomorrow and estimated to be between 2.5 to 4 million. Not everyone in this demographic was going to buy a home, but there is a percentage for sure that will affect demand. Sellers usually take a few months to come to terms with the market changes and will drop prices or take their home off the market. It's true. Honestly, you typically buyers and sellers, they learn about the market kind of 2-3 months behind the actual what's going on the ground. So it's quite interesting. Mark, you mentioned that too. Now I want to go to Susanna. She asked, with shelter in place, would there be a lot of off-market listings and lead to low appraisals on regular sales transactions? Anyone would like to talk about that? Well, I can tell you that I already witnessed a lot of off-market listings because nobody wants to put it on the MLS right now. Although MLS has decided to pause the day on the market, at least for Santa Clara County. And then I know a few other MLSs and several different areas, they have paused the days on the market. But still a lot of agents would advise just put it off the market right now, just market among the real estate community before until the shelter in place order is lifted. And will there be low appraisals? And I think the low appraisals, we have already seen appraisers a lot more conservative. We definitely have heard a lot more from other people saying that appraisers are more conservative now than ever. Trey, did the government or bank stop foreclosure for now? I think they are talking about it. Anyone has more comment about this? I know I read it says that they are talking about will have a mortgage relief so that they won't do foreclosure.
I don't have a lot of detail on it. This is Daniel Gadd again jumping in. I don't have a lot of detail on it, but I did read that HUD is at least HUD, which backs government loans like FHA loans. They've put a 60-day hold on foreclosures to give people time to accommodate. And I think this is one of those things that we'll see the mortgage industry is adjusting day to day with this. And I personally think that there'll be a lot of flexibility put out there because I don't think people want the economy to fall apart because of a virus. And so they're going to, I think banks are you're going to see that in the foreclosure process, the government's, they're trying to put in regulation to stop foreclosures or postpone them at least to give people time to get back to work and get back on time with their payments. And, it doesn't make sense if we have a 30, 60, 90-day downtime to start taking, trying to take people's houses away when they can be easily back at work afterwards and making their payments again. So I think there's going to be a lot of government intervention to prohibit foreclosures is my opinion on it. But so far, all I've seen is HUD put a policy for 60 days to hold off, at least for now.
I did see a letter earlier, actually, somebody had shared this from another group, shared a letter from Fannie Mae. They are allowed up to 12 months relief on mortgages. So, but I didn't read the detail, but I'm sure you have to prove that, you have loss of income really because of the coronavirus. So I'll be more than happy to share more information on that. I want to answer.
This is Peter. I actually, Newsom was live just an hour or so ago. So he has from all credit unions and lenders for the state of California, I'm talking every bank except B of A has agreed to 90 days.
Mm-hmm.
Now, all the details, what documentation is going to be needed, again, as many people mentioned, you're going to have to talk to your lender, go through the motions. I don't know how strict they're going to be. It sounds like they're going to be very lenient with what kind of documentation needs to be provided.
Mm-hmm.
But it does appear that it's going to be 90 days for the forbearance. B of A against at 30, but I imagine they're going to change that and just follow suit. So for state of California, it sounds like all the lending institutions are on board for 90.
Mm-hmm.
One of the questions I still have and haven't got an answer to falls into, the owner occupied. We know the renters, tenants are going to get a major boost or help. As far as owners, I know for sure on owner occupied, you're going to get some type of forbearance leniency, but on investment property, I think that's still up in the air.
Yeah, I heard about that. They are working. They were trying to help with the tenants first, and then the next project is going to be helping the landlord because no matter what, it's going to affect the landlord. If they don't get rent, how are they going to pay for the mortgage? And they still have maintenance, property tax, insurance, all these expenses they have to pay, right? So, well, I guess we just have to wait and see.
I actually have one other, sorry, it's Daniel Gadd. I have some firsthand knowledge on that too, just because I spoke with a client yesterday who owns a duplex, and they called the servicing department for their loan, who they make their payments to. And they were told, at least this is what, and it's just one bank. So, this isn't industry wide, at least the servicing department for their loan, which was Mr. Cooper, which is one of the biggest loan servicers in the United States. They told the client that they would allow them to have 3 months of no payments, but this was the weird part. They said at the end of that, they want all 3 months of payments in one shot.
What?
And that didn't make a lot of sense to me. Now, that's not firsthand knowledge in the sense that I was on that phone call, but that's what the client told me they were allowed to do as far as an investment property. They could postpone their payments, but then the bank was telling them that they had to make a lump sum payment afterwards, but they wouldn't be marked late on any of their payments. It wouldn't go against their credit. It wouldn't be anything negative, but that didn't really make a lot of sense to me because most of these programs that they're trying to do are going to postpone the payments and just add, like if you skip 3 months of payments, then you add 3 months to the tail end of your loan. But that's what they were told, or at least maybe that's the way that they interpreted it.
Yeah, they call it a pause, but I will be surprised that that's what they're doing. I'm almost thinking that person probably doesn't really understand what his own bank is offering. I don't know, but it just does not make sense. I agree with Daniel.
It's very possible they didn't understand. I'll be honest with you, because I just was trying to give back the information I heard from them, but I think they were confused as well. So it may not be the correct information. I apologize.
No. But this really, again, I want to emphasize that every single person in this world right now, this is unprecedented. Nobody has experience and nobody is an expert in this. So every one of us is still learning during this time. So, but that is more of a reason why we need these kind of like question and answer. We only have about 12 minutes left, but I want to make sure we answer all of the questions. Jenny asked, for investors looking to purchase multi-units, given the circumstances of forgiving rents due to no eviction policy, although short-term, doesn't this affect the confidence to purchase, knowing landlord can't secure rents nor evict tenants? That is a great question. But before going into that, I wanted to actually bring Wei Ming, who is a 1031 exchanger, because for investors looking to purchase, a lot of them actually selling, right? And they need to do 1031 exchange to purchase the multi-units. Well, we only have 45 days. They only have 45 days to identify up to 3 properties. What will happen now? I mean, do they give extension on that? And then we can talk more about like how to find these multi-units. Wei Ming, are you?
Yes, can you hear me?
Yes, I can hear you now.
Okay. Surprisingly, we haven't gotten any additional instructions or anything like that from the IRS or the government regarding any extensions, which is a little bit of a surprise, because in the past, whenever there's anything federally declared like a disaster, like the Paradise Fire, they usually give you guidelines that you can follow. For the Paradise Fire, it was 120 days, but for this, we haven't had anything. And I've sort of, asked around, said, hey, why is it that there's no extension given as of yet? And maybe it's also because for the 1031 exchange, in the past, it's only affected certain areas and certain zones. It hasn't impacted as many areas, as many markets as the coronavirus has. So there may be a delay in having a extension provided to investors, but at the moment, what we're being told is all exchanges are going to move forward as normal.
Wow, I'm surprised about that too. I'm hoping they will provide some kind of extension in the future. So in terms of purchasing multi-units, given the circumstances for giving rents and no eviction policy, that was my question as well, because obviously we work with a lot of investors on multifamily, and when we do analysis on them, we use pro forma to see how this property is going to perform after you purchase it, right? And what if the property itself already have tenants who are not paying rent, so how would like a lender, let's say, to underwrite this property if knowing that there are some tenants cannot pay rent and then have no eviction policy? How are you going to underwrite this file now, Marty?
It's going to be a case-by-case basis. I have a feeling multifamily is going to be harder than it's ever been.
Mm-hmm.
I would say the other property types will be easier.
Yeah.
Because of the whole eviction thing. The other thing I wanted to throw in there is on the 1031 that the gentleman was talking about. I did see something yesterday that somehow the government extended some of the deadlines in the opportunity zone world. So I think they're starting to cycle through all of these sundry areas and going, oops, we have to give some relief. I think they'll get to it on 1031. I'm sure that the various lobbying groups will be pushing on that, and I would be shocked if they don't get an extension past 45 days to identify.
Mm-hmm. I agree.
Helen, do you mind if I jump in on this? It's Daniel again. I know this is not my forte as a residential lender, but I'm in escrow right now for a 10-unit building. So I actually have personal experience being in the market as somebody buying a commercial apartment building at this moment. my feeling on it is, and I buy and flip I buy and flip apartment buildings. I've been doing it for 2 years, and between my brother-in-law, my sister, and I, we've bought and sold. And none of these are in California, by the way. Otherwise, I would absolutely be working with you. But we're all in Oregon, and we buy and flip them. Have about 6 properties we bought in the last 2 years. The one I'm in escrow now for is in a town of 7,800 people. I'm not going to proceed with it because my concern is a town of 7,800 people, the economy, if it's hit hard, they will be hit the hardest and have the most difficulty paying rents. And I'm not liking the odds of me getting into a property where I'm not going to receive any rents. But if I were buying in California, if I was buying in the Bay Area, if I was buying in Los Angeles, if I was buying somewhere where there is a lot more money than in a small town, I will tell you that my personal feeling is I would be less concerned about it, because I personally think that, big cities and where there's a lot of money rebound much faster. Even if people are out of work temporarily, they're going to be back at work very fast. And that, most of the investment properties in the big cities, I don't think are going to, you might have tenants that need 1 or 2 months of maybe not paying rent. But if we get everybody back to work in, let's say, 90 days or so or less, then, it's less of a concern for me as an investor who buys these type of properties than it is when I'm buying in a tiny town, where that it does worry me in a small town to be buying a property right now that's, where the tenants, are potentially can't pay their rent.
Good point for Daniel is that, like, whenever I talk to clients about like buying investment, especially apartment buildings, we always talk about like buying which market we should be focusing on, and the population is very important to look at. But thank you so much, Daniel, for making that comment. But Jenny, I just wanted to talk about that again, because like the situation is so fluid. There are so many changes currently that's going on. I think a lot of lenders, even myself, is like, yeah, how do we underwrite this now? So we definitely going to be staying in touch with you to let you know, like, what whenever we find out more information about that. And then I have an anonymous attendee. He or she asked, do you know if the demand is the same for East Bay? Anyone would like to answer that question? Trey, you work a lot in East Bay.
Yeah. Can you hear me?
Yep, I can hear you now.
Yes. So due to the COVID-19, most of my showing has been just private showings. So a lot of the open houses, and well, let's say all the open houses is no longer on weekends. They just mainly do private showings. In terms of demand, I do see there is still people marketing properties. Most of them, I got a few people who've been marketing me property off market. And I do see a slight drop in demand because because a lot of buyers is not going out there to look at houses. And I think throughout this period, from now to April 7th, before the shelter placing is lifted, there'll be a lot less, just not much transaction going on. But I think shortly afterward, following you and Andy's comment, I think it will be a swift change in the market where there's be a lot more buyers on the market and looking at houses again.
Yeah, we had a listing in January that is in Newark, which is East Bay, and we had an offer deadline. We told everyone we want 2 weekends of open houses, and then we were going to take offers. 1 week before our offer deadline, we received 11 preemptive offers. So we got to accept an offer. So the demand before this whole thing happened, it was like that. It was actually, we are under contract in February. So the demand before this happened, it was definitely really strong still. What will happen after this? I mean, this is my point is the whole entire Bay Area. As long as most of our clients are engineers who work for big corporations, the hardest hit people, unfortunately, will be small businesses as well as hourly pay. So those are the ones who will get hit the most. But at the same time, they may not be the demographic of the most of the home buyers in this area. Did we answer all of the questions? Anyone else have any questions? Because we have 2 minutes left before we hit 3. So let's say if we don't have any questions, we are always here to answer. I also, I have a poll here, but apparently no one can see it, but I wanted to see how many people would like me to put this together again. And then maybe we can do it again next week. So look for an email from me. I really appreciate everybody being here. I hope this is very educational and informational, and we are here to help. If we did not answer your questions, feel free to just email us, and then we'll find out if we need an attorney or if we need any other kind of vendors or professionals to answer your questions. But I really appreciate all of you experts today to answer these questions. I think it is extremely valuable. Anything else? If nothing, thank you so much. Oh, sorry, Mark. Mark, you wanted to say something?
Yeah, just real quick, and I put it into chat.
Oh.
But if anyone has any leads or land for sale, my partners and I are looking to develop apartment buildings for long-term hold. And we are also dabbling with the idea of doing 100% affordable housing due to some recent law changes that allow us to go unlimited density and some other benefits with tax credits. So if anyone has any leads, connections to off-market land, we're open to it.
Do you have a specific area that you're looking for?
Anywhere really in the Bay Area, but we are looking at Vallejo, a couple pieces there. We're looking at a few in Marin County, even Solano, preferably along the I-80 corridor would be pretty ideal for us.
Okay. See, there you go. Oh, by the way, last comment is that I do see a lot of investors saying that they're going to pull money out of their stock market to put it into real estate. So, so this is one prime example here. Somebody is already looking to build. But thank you again. I will, I will email you guys and talk to you later. Thank you. Bye.